The Federal Reserve is expected to begin cutting interest rates in the coming week. And Wells Fargo chief economist Jay Bryson tells Fox Business the Fed should cut 50 basis points in September, another 50 in November, and then 25 in December for a total of 1.25 points by the end of the year.
The labor market is starting to weaken. Inflation is coming back down towards 2%. And generally, what it really boils down to is the stance of monetary policy right now is very restrictive. And so they have a lot of wood to chop just to kind of get back to neutral. And they kind of need to get going back in that direction as the economy continues to show signs of stress.
Now, there are others out there who are predicting that it should be 25 basis points coming up in September and then going from there. Either way you cut it, it looks like the rates are going to come down. Lower interest rates can also affect annuity payouts, leading to lower returns on those. So is the time to consider this form of fixed income now before the cuts?
Well, that's an interesting thing. Right now, I would say that if you're interested in a fixed rate of return, like a fixed percentage rate return in a fixed annuity, then you should probably be looking. We started getting emails from our partners about, I want to say 3 weeks ago, saying, batten down the hatches, the interest rates are going to start dropping. And so they were trying to get us to get out and start talking to our people about locking in some of these rates. When I look at the annuity landscape, I realize that there's really 3 types of annuities that we talk to our clients and customers about, and a fixed annuity is just one of the 3. So fixed annuities, you're going to see a drop in those interest rates, but they're still at present, they're still affording a pretty good return. You also have variable annuities, which are linked directly to the performance of the stock market, where account values will rise and fall with the selected investment sectors that you pick in the variable annuity. And the third one, and a very popular one these days, is the fixed indexed annuity, where you purchase options on a underlying index. You participate in the positive performance of the market, but if the market takes a drop, you're not as affected nearly as much as you are on the variable side. So I think when we have these annuity discussions, the first and foremost is what is the right annuity concept for each person to consider, and that's what we help people do here at America's Retirement Headquarters.
And, asking the question, should I get an annuity before rates drop? I think, yeah, it's worth it kind of exploring. What I'm still really surprised at is, how many people are not getting paid really kind of what their fair share of interest is. I just went on and I went to the FDIC.gov website looking at, the national deposit rates right now. Interest-bearing checking account, the national average is 0.08. National average on a savings rate is 0.46. So, if we look at things that are out there today, whether it's a fixed annuity or an index annuity, I mean, even things like, money market accounts, there's bank CDs, there's a lot of attractive rates that are out there today. And even though that, rates may be coming down a little bit, there's still a great window of time to put some of that, conservative money, the money that you don't want to have exposed to risk, to work. And again, depending upon, what you're looking for from a liquidity standpoint, we can deal with everything from giving advice on the high interest money market accounts, looking at those bank CD rates, or, even looking at things that can extend out those rate locks even longer using some of the insurance products that are out there. And as, Dave mentioned, I think you're going to see a direct impact to the risk of lowering rates, especially when it comes to things like a fixed annuity. Dave, you did a pretty good job communicating the number of emails that we're getting from carriers that are, looking to lower their fixed rates. With index annuities, those rates typically also do come down. It typically means lower growth potential from lower caps, participation rates, higher spreads. Variable annuities, in general, variable annuities have income riders. Those riders have fees and expenses associated with it. In my opinion, interest rates don't necessarily have a big impact on the income riders that are out there because they're charging those fees and expenses Actually, lower rates could be a positive on some of the bond sub accounts that are inside of there. So again, it goes back to like what you said. It's a matter of knowing what you own, what's the purpose for it, and then figuring out a solution. It's all part of what we build out again in that retirement team action plan, going through that summary of observations, taking a look at it, and figuring out for every client that we meet with, how can we make their money work as hard as possible. The takeaway there would be if you have what you would consider to be a large balance in your checking, savings, maybe a CD that's going to mature shortly, or if you already own an annuity, now may be an optimal time while rates are still extremely attractive to take a look at how to put all of your money to work, and we can help you compare that as independent professionals. We don't work for any one company, can help try to navigate what the interest rate environment is out there and help you earn as much as you possibly can.
Figure out how your money can work best for you, because at the end of the day, that's what's most important is your circumstances, trying to make sure that it is working as hard for you as you did for it. Perhaps it is using situations like using annuities or money market accounts, things like that. But in this still high interest rate environment, certainly worth taking a look at, and is easy to access and reach out by giving a call, 419-794-3030. Once again, 419-794-3030. Or you can go to the website to find out more about the team at America's Retirement Headquarters and schedule a time to speak with them at arhq.com.